Thank you to everyone who is joining us today. I'm Shelby Kerns, Executive Director of the National Association of State Budget Officers, or NASBO, and I'm excited to welcome you to NASBO's third Let's Talk State Budgets, a conversation with NASBO leadership webinar. NASBO is celebrating its 80th year as the professional membership organization for governors, budget, and finance officers. As the chief financial advisors to our nation's governors, NASBO members are influential decision makers in state government. They guide their states and territories in analysis of budget options and in the formation of sound public policy. Budget officers and their staff play a vital role in allocating resources to meet the needs of their states and territories. Today is a unique opportunity for you to hear from those directly doing the work. NASBO leadership will provide insights into state fiscal conditions, the challenges they face, and the priorities of their governors. You'll also hear from Eric Kim of Fitch Ratings to provide the perspective of a credit rating agency. Before we dive into the panel, I want to share some of what NASBO is working on and resources to help you learn more about what's happening with state budgets. Some of the things we're tracking are governors' proposed budgets, both at this time of year when governors are proposing budgets and later in the year when states have enacted budgets. We'll have summaries posted on our website to help you see what's happening in each state. We also post summaries of governors' State of the State speeches to help you see those themes and priorities as well. Some of the themes we're seeing include that states are in a favorable fiscal condition. We're seeing a return to normal revenue growth rates. And we're also starting to see expenditure expectations begin to outpace revenue projections in some of these really key areas. NASBO is also the only source of fiscal data for all 50 states, 3 territories, and the District of Columbia. We publish 2 surveys. We publish our fiscal survey twice a year and the state expenditure report once a year, and these provide vital information that you can only get from NASBO. A few pieces of data from these reports will provide helpful context for today's discussion. Today, you're going to hear K-12 mentioned. That's because state general fund expenditures, K-12 takes up the largest share at just over a third. You're also going to hear talk about federal funds. That's important because federal funds make up just over a third of state expenditures. Medicaid is another expenditure area that you're going to hear discussed. Medicaid takes up about a third of total state expenditures. So when all fund sources, state and federal, are accounted for, a third of those dollars go to Medicaid. And of those total Medicaid expenditures by states, 64.3% are funded by federal dollars. You're also going to hear rainy day funds and savings mentioned numerous times. NASBO publishes data on state savings levels, and as you can see here, they are at record levels. So now that I've set the stage, I'll be joined by Eric Kim, who is a Senior Director in Fitch Ratings' U.S. Public Finance Department and head of the U.S. States Rating Team. Eric joined Fitch in March 2007 and also worked in Fitch's Education and Nonprofit Institutions Group. Eric, on behalf of NASBO and all of our webinar participants today, thank you for being with us. Let's start with a quick overview of the role that credit rating agencies play for those in our audience who might not be familiar with what it is that you do.
Yes, so thank you, Shelby, for inviting me. I'm always happy to join the NASBO group. This is a really important constituency from our perspective. So I'll talk a little bit about what Fitch does and our role as a rating agency. We see it as really to provide information and analysis for the municipal market and primarily investors as they make their decisions. So our ratings are obviously the most important thing that we do. This is how we communicate the ability and willingness of the organizations we rate to repay bondholders. And that can be state and local governments, corporations, even nations. We have plenty of sovereign ratings as well. So that is the core of what we are providing. That's the core of what we are intended to be as a rating agency. We also do a bunch of other analysis and research that revolves around that and covers the different entities that we rate, but really it does always come back to understanding the ability and willingness of the entities we rate to repay bondholders. That's our focus.
That explains why you and your colleagues are so well versed in state fiscal conditions. You're ensuring that they're able to meet those obligations to their creditors. So to that end, what are you seeing in terms of the fiscal outlook for the rest of the year and into 2026?
Our sector outlook for states is neutral, and we expect credit quality is going to be stable and strong for state governments. We have essentially all either stable outlooks or positive outlooks on 6 states. So we expect that the credit conditions are going to be solid, and a big piece of that is driven by the financial health of state governments. So states are coming into the year in a very good place in terms of financial resilience. Dedicated operating reserves and NASBO, we look to NASBO for some of this data. Dedicated operating reserves are at essentially the highest levels they've ever been across the board in almost all states. Um, from our perspective, states have done an excellent job overall in terms of taking that windfall of revenues that came in during the early years of the pandemic, really making good use of that to pay down liabilities, pay down various one-time obligations, and also build up their reserve funds so that they were cushioned and ready for the next inevitable downturn. Um, and what we're seeing now from a fiscal perspective for states is that revenues are starting to weaken. They have been actually for about the past year or so. And it's important then, again, that states have that cushion heading into what looks like to be certainly a weaker revenue environment from the state perspective. And the economic piece is also really important for us. We're seeing economic conditions start to cool a bit, and there are clearly some more risks and uncertainty on the horizon as well.
Oh, what's the biggest risk that you do see on the horizon?
That is such a challenging question to ask a credit analyst. I mean, our job is to look for risk. That's what people are interested in hearing from us. So we see a few different things as key risks for state and local governments. I think number one is the potential for an unanticipated recession. So just because of the way state governments are funded and the way they operate and the way their budgets work, economic activity really drives tax revenues, which is the key piece of state budgets. So when there are slowdowns, that makes it more challenging for states. And we're seeing that a little bit now with revenues coming in a little slower than have been in prior years. But when things become unexpected and the recession hits with uncertainty and people aren't ready for it, that's when the real challenges happen for states, right? So we saw that in the global financial crisis. We saw that obviously with COVID and the pandemic. And that I think is probably the number one potential risk, is that a recession hits that states aren't ready for and haven't been able to prepare for in a meaningful way. And there could be lots of different causes for that. And of course, it's always hindsight, right? You never know what's going to cause a recession until it actually happens. I think one economic risk we've been talking a lot about as a company is the potential that significant increase in tariffs leads to a real uptick in trade protectionism and more of a back and forth trade war. And that could have negative economic implications for sure, depending on the extent of what the US imposes, how countries retaliate, and how that plays out. So that's probably the number one risk that we're seeing. There are plenty of others as well.
I think one of the things that you and I talk about a lot, and that we, maybe see in headlines, is for the past few years, there's sort of been this idea that states are maybe not in a great fiscal condition, or that they won't be soon, I think is what we see. And then you and I talk, and we talk about how these fiscal conditions look really good. Have you been surprised at the resilience that states have? Or do you worry that maybe, for lack of a better phrase, that luck might run out, and that we might have darker days on the horizon?
It's a really interesting question. I think from a high level, state ratings from Fitch have always been relatively high, always been in the AAA to AA range for almost every state. There's, of course, there are outliers, but for the vast majority of states, we're talking about extremely high credit quality or very high credit quality. So embedded in there is our view that states will make fundamentally sound fiscal decisions over the longer term that supports their ability to repay bondholders. We have definitely seen some improvements, I think, in the past few years. You can see that in our rating actions. We've upgraded a handful of states because what they've done with some of this revenue growth that they've seen over the past years coming out of the pandemic has been, again, to make some prudent choices, pay down liabilities, build up reserve cushions in a lot of ways. So you could think of it as luck. You could also think of it as kind of making the right choices when faced with unexpected revenue surpluses. So I think what states are now having to deal with, though, and this gets to what you were talking about, the idea of that luck running out potentially, is the circumstances are changing, and they have been for probably a year or so now, where the revenue environment is definitely weaker. States have also done things in terms of tax policy, and there are policy reasons behind that in terms of potentially and hoping to drive economic growth, but they've changed tax rates and tax structures to bring in fundamentally less revenues on the budget side. So that makes their fiscal dynamics a little bit more challenging to manage. And it adds a little bit of uncertainty because some of those tax policy changes haven't gone through a downturn, so we don't know exactly how they're going to play out. So we do expect that states are now facing tighter budgetary times. I think we're seeing that pretty much across the board. But I said this earlier, our ratings are primarily stable, a handful are positive. So we're not anticipating that all of a sudden, because things are tighter, states are going to face much more or that they're going to make worse fiscal decisions. We think that they're going to have to make more challenging ones, but states have that ability. They have the wherewithal to make choices, and we've seen them do that in the past, and we expect that states will be able to manage through these leaner times as well going forward, making long-term healthy fiscal decisions.
A good way to look at it, they make good decisions, and the right decisions. They're just not always easy decisions. So I appreciate that. And I really appreciate you joining us today. Your insights are always welcome and so good for not just for NASBO members, but for everyone to hear, everyone who's interested in state fiscal health. So thank you very much for joining us today.
Thank you.
Turning now to our panel of budget directors, I'm pleased to introduce NASBO leadership. NASBO President Dave Thurman of Tennessee, NASBO past President Kim Murnieks of Ohio, and NASBO member at large Erika Lee of California. NASBO is very fortunate to have Dave, Kim, and Erika as leaders of our association and in the profession of state budgeting. And I'm particularly grateful to them for making time in their demanding schedules during a particularly hectic time of year to have this conversation with us today. Dave, Kim, Erika, it's great to have you with us. Thank you. NASBO posts summaries of governors' budgets and state of the state addresses. And some of the topics that we've seen rise to the top this year to date are Medicaid, general affordability concerns, housing, and workforce. What's the top budget issue in your state? Dave, do you want to kick us off?
Sure, I'll go first. For us, it's definitely education. We just had a special session on education and just rolled out our budget. And the governor is recommending over $500 million for public education to include growth and inflation, to include salaries, to include for teachers, to include bonuses for teachers, and to include funding for construction for public schools, totaling over $500 million. So that's a big thing. The second thing, we had a special session to fund a program to allow students to choose where they wanted to go to school, either public or private. And that's over $150 million. And that was a huge priority to the governor that we funded this year. And so I think definitely we're education focused this year.
Kim, what are you seeing?
Well, here in Ohio, first of all, it's great to see Shelby, and it's always great to see Dave and Erika too, and talk about my favorite topic, the Ohio budget. We are right at the start of our legislative budget planning process. Governor DeWine introduced his budget a few weeks ago, and his budget is designed to ensure that our state's economic growth continues. So it builds on the things that make Ohio the heart of it all. Our priorities focus first and foremost, as always, on children and families, and also on students in our workforce and businesses and communities. So kids are really at the center of our budget, and one of the key proposals in Governor DeWine's budget is a new child tax credit to support working parents and families. And the credit will provide parents up to $1,000 per year for each child up through the age of 6. And we know that families have been hit hard by inflation. And so this is our tax policy is focused on providing them relief. We also continue to focus on education. We're in the final phase of implementation of a school funding formula that began 2 budgets ago. And Governor DeWine's education policy really focuses in on reading, and specifically the science of reading. It's critical that we improve literacy across our state. We know that reading really is the foundation of all learning, and we need to make sure that our kids are learning to read and reading at grade level at an early age. And so we continue to support things like ongoing supports for teachers across our state as they focus in on the science of reading. As the governor says, we know how kids learn to read. The science is in. The results are clear. And so focusing on the science of reading and literacy is important. And it's been something that we've really focused in on here in Ohio and continue to support in our budget.
Erika, how about California?
Hi, everybody. Yeah, here in California, a top budget issue, not just for this budget, but for many budgets, has been overall affordability, and particularly as it concerns housing. As many people know, California has the highest cost of living of any state. Back looking at 2023 data, we're about 12% above the national average. And that's primarily due to housing costs, which were estimated to be over 50% of the national average. And so despite an increase in housing prices across the country, California still has significantly higher costs and higher levels of unaffordability. And over the last few budgets, we have invested tens of billions of dollars to build the state's stock of affordable housing. We've expanded state tax credits, invested in infill infrastructure, multifamily housing, transitional housing, accessory dwelling units. However, permitting has still remained relatively weak. And then add to this the recent devastating fires in LA, which destroyed about 30,000 structures. Three-quarters of those structures are residential. And so we're concerned that labor and building materials needed for rebuilding will actually compete with new construction and result in even higher costs for construction due to the surge in demand. And obviously residents that were displaced there are going to need to find new housing. And so I think that's just the concern is increased prices, worsening housing affordability, both in the homeowner and in the rental markets. And just generally speaking, housing affordability is worrisome here in California, and it points to a broader concern of large swaths of Californians not being able to afford housing and choosing either to leave the state or not by choice, being displaced from housing altogether. So that is top of mind here in California.
Understandably, and just have to say, I think it goes for all of us that we've been thinking about California, and certainly watch those devastating fires. As we think about some of these expenditures that you've all mentioned, and how there's pressures on education and pressures on housing, and looking out into out years, we've definitely seen a growing number of states project that their expenditures are increasing at a faster rate than their revenues, particularly over the long term, when we do long-term expenditure analysis. So how are your revenue collections and your estimates matching up with your projected expenditures? Are you concerned about budget gaps in the short or the long term? Dave, do you want to take the first stab at that?
Yeah, I think that's right. I think we're definitely starting to see a slowing of growth. Still growth, but just not like we've seen in the last 4 or 5 years. I think most of the concern I have is really 2 or 3 years out. Even though we've had significant growth, we've been, I would say, judicious in how we've grown our budget, given our growth rate. We didn't spend all the money that we saw and programmed it in as recurring. So we've been a little slow to do that. But at the same time, we've made huge investments in education, teacher salaries. We've expanded programs to needy populations. We've created new programs, and all that kind of feeds into your base. And that the cost to grow those programs with inflation is going to come together, I think, in the next 2 or 3 years as our growth continues to slow. So nothing in the immediate term, but I think definitely in the out years, I think that's going to be a challenge for us to kind of deal with that, because I think where we're headed is we're not going to look at new revenues. We're going to have to deal with what we have in terms of revenue growth and reconcile that with our growth of our programs.
Tim?
And I would echo some of what Dave said about really paying attention to the current, but really looking forward and always having that eye on the future. Ohio always budgets conservatively, both on the revenue and the spending side. Current fiscal year, we're 7 months into fiscal year 2025, and our general fund tax revenues this year are running about 3.2% ahead of our projections from last summer, and about 2% ahead of last fiscal year. So, like Dave said, we're looking at more normal growth patterns, especially compared to the above the line growth that we saw the last few years. And really, we planned for this. We knew that this fiscal year especially would be a return to normal and kind of back to what I'll call steady growth patterns. On the spending side, our general fund expenditures this year are about 2.6% below projections. So overall, we're in a good position, and our budget for 26 and 27 projects continued steady revenue growth in our general fund. We are expecting tax receipts about 4% above this year, next year, and then about 3.4% growth in fiscal year 27. We really did plan for the back to normal environment that we're in. We were really careful the last several years, making sure that we were directing one-time federal money and also the above the line kind of excess state revenues to one-time investments. We were constantly planning, making sure that our ongoing revenues were for ongoing expenditures, that we were staying structurally balanced and avoiding that fiscal cliff. Now, I think we and all states are going to have to keep focusing on this, especially as we get back to normal, as we continue to see some of the slower growth patterns in the upcoming years, and really looking at our expenses and making sure that we do stay structurally balanced.
Erika?
Yeah, here in California, in the short term, we are seeing stronger than anticipated performance of the economy, the stock market, and cash receipts, which here, we're progressive tax system here, so that's good for us. And so we are actually projecting an upgrade to our revenue forecast in the most recent governor's budget when you compare it to last 2024 budget. We're projecting about 16.5 billion higher in revenues, which is actually, I would say, maybe just 1%, but higher than it's been in the last two budgets. We've had to account for about 80 billion in deficits. So this is a better year for us here in California. For the longer term, our big three revenues, which is personal income tax, corporate tax, and sales and use tax, are projected to grow about 5% on average over the next several years. However, we are concerned about some of the baseline expenditures, some of the baseline programs. The expenditure growth is outpacing that revenue growth. So that is something that is concerning in the not so near future. We're seeing increased costs in the current year, and I want to speak a little bit about Medicaid, because that's really where we're seeing those costs increase. Total program costs have gone up since 2014, since we expanded Medicaid pursuant to ACA, more than twice as much. And so that's a real concern. And California has further expanded Medicaid eligibility to include individuals no matter their immigration status. So Medicaid costs are coming in higher than projected, and that's mainly due to higher than expected caseload and higher than projected pharmacy costs because of increased utilization of more costly drugs. And at this point, I would say that the growth in Medicaid is really unsustainable. We are monitoring these costs, but we're also looking for ways to streamline and considering changes that need to be made to preserve the core program. So that's one of the programs that we're looking at. There are others also that we're concerned about.
Thinking about that and about, the sort of how things can become unsustainable over time, and having to take a look at those expenditures and programs, we do know that the underlying fiscal health of states, as Eric talked about, is still good. It's still, states are in good from a credit perspective, in really good shape. But as states have continued to grow their rainy day funds, their reserves, and lower debt, there's still these pressures But so how does all of that together make you feel about your underlying fiscal health? As we've sort of concentrated a little bit on the concerns here of expenditure growth. Dave?
Yeah, I would say our underlying fiscal health is good. Underlying economy is really good. I do think we're starting to maybe see some weakening in terms of slowing job growth, slowing job expansion, which you know again maybe it fits into that returning to normal kind of look. I don't have any concerns about our reserves or our debt. Tennessee has a long history of really loving our rainy day fund and avoiding any significant debt, and so I don't have a concern there. But with my budget hat on, I'm always tend to be a little bit of a pessimistic, have a pessimistic outlook in terms of where we're headed, because we have had a long run of economic growth and prosperity, and I know at some point that's going to slow down, and what that's going to look like, I don't know, but. I'm always concerned about how that's going to come together, as we mentioned earlier, because when you build a budget, you kind of have to think about things that you have to do first before you can do other things. And I think those have tos are coming together with our revenue growth. And I think, again, that's a concern I have about how that's going to reconcile going forward.
Very different than the past few years, for
Right.
sure. Kim, what do you think?
I think it's a similar story here in Ohio. We do have our fiscal health is strong. Our rainy day fund, like a lot of states, is at an all-time high. We also have a shorter term emergency purposes fund for contingencies that arise during any given budget year. And that's also at a record high because we planned really proactively for what we're seeing, this kind of return to normal situation. And because we made some really prudent decisions, our state debt levels are also much lower. We saved billions of dollars for Ohio taxpayers by reducing our state debt. We were able to use some of our one-time above the line state revenues the last couple of years for our last state capital budget. We were able to use cash instead of issuing bonds for that 2-year period. And the savings that we achieved because we were able to use cash and not issue debt will amount to more than $1.3 billion in interests avoided over the next 20 years. So that really puts us at a strong position. At the same time, we were also able to pay off existing debt. And as at the end of calendar year 24, a month or so ago, our total outstanding debt had fallen by $3 billion or more than 30%. So again, we're at a very strong fiscal position here. We, as a result of that, Ohio was upgraded by all 3 of the major credit rating agencies over the last couple of years to AAA for the first time in our state's history. So we constantly are planning very conservatively so that we can be prepared for whatever uncertainties are ahead. But like a lot of states, I think Ohio is well prepared at this point in time.
Erika?
As I mentioned before, we're coming off of 2 pretty difficult budgets. The governor's budget proposal is balanced. We have no cuts or solutions like we have had over the last couple of years. And I would say that in terms of our fiscal health, we are seeing, as I said, the near term revenues increase, but we also are trying to build up our reserves again. So we did tap into our reserves last year and this year to help meet some of the budget deficit. But we have currently about 11 billion left in our rainy day fund. We have 17 billion across all of our reserves. We are proposing a larger balance in our state fund for economic uncertainty, which is essentially the state's operating reserve, our kind of checking account, as I like to call it, to address what I would say are higher than normal uncertainties that lie ahead for us. And so for more long-term planning, as part of this year's current budget, we included a plan that the state would set aside a portion of any anticipated surplus funds to be allocated at a later date. So we weren't gonna spend all the dollars that we thought were coming in, and that's so the state doesn't commit funds that are anticipated until they actually materialize. And lastly, the governor is proposing some constitutional reforms that would allow the state to save more in our rainy day fund. We're currently capped at 10% of general fund revenues, and we are proposing to raise that cap to 20%. So that will allow us to save more. We want to be like Tennessee. We want to love our rainy day fund. So we need more to love. And as I mentioned earlier, we're really taking a hard look at some of the programs whose costs are outstripping our revenue growth. And so I think all of that and building our revenues is how we're going to remain fiscally sound going forward.
I think sometimes people don't know the long view that state budget directors are taking and looking at, and how, like to Dave's point, we're almost all a group of pessimists because always preparing for the worst, right? That's the sort of the name of the game. One of those, I think, uncertainties that Erika mentioned is there's so much action at the federal level right now, and that can have a lot of impact on state finances. So with so much that's happening, from the wind down of pandemic era funding to actions from the new administration to congressional budget debates, there's certainly a lot to discuss. So maybe you could share just one or two things that you're really watching as you think about your state budget. Dave?
Yeah, so I would say the new thing that's going on right now is the changes that are being discussed at the federal level with the new administration. I'm really curious. The president and the Congress have a really unique position to make some significant changes, and I'm not concerned as much as I'm just kind of curious how that's going to play out, because there's so many different areas that they can look at, and so I guess that's what I'm most interested about.
I'll just concur with Dave. It's always interesting to watch the happenings at the federal level, and we'll continue to do so. I would say organizations like NASBO are crucial to keeping us up to date and providing us with accurate information, and I really appreciate that. Overall, we're in a solid position here in the state of Ohio. We are very focused on enacting our state budget while continuing to watch what's going on at the federal level. But, I think just observing, acting on actual information and not reacting just to, whatever the latest headline is in the news is important. And that's what I've been emphasizing here.
And it's sort of keeping that calm demeanor when other people are reacting to things that are sort of thrown out, maybe not even an actual proposal yet.
That's right. Exactly.
Erika, what are you watching?
Well, let me just start by saying we have a lot of risks on the horizon here, stock market, inflation, but I would say that the uncertainty and the risks around federal policy is probably the most significant immediate risk to our economic forecast here in California. So we're monitoring everything. I mean, as Kim said, there's a lot of talk, but what's actually going to happen is still sort of up in the air. But we are concerned, of course, about the potential loss of federal funding, which typically here in California comprises about a third of our overall budget, and that equates to over $150 billion. So California, like probably all other states, certainly doesn't have the funds to backfill widespread withdrawal or reductions of federal funds. So that's just globally a concern. More specifically, as it concerns potential, the tariffs, for example, especially the ones targeting some of California's largest trading partners. We believe these tariffs will likely lead to price increases on consumer and producer goods here in California, and of course on immigration policy, as restrictive as what's being talked about. I think there's real concern there about labor shortage issues. as well as California population reduction over the next few years. So all I can really say is that we are concerned about a lot of things. We're monitoring the conversations, obviously waiting to hear what happens both from the president and Congress to see what the real impacts will be on our budget here in California.
Well, there's a lot to monitor and think about and watch, keep an eye on. I know there's so many positive things that happen at the state level, and sometimes that gets overshadowed by federal headlines, that people don't, especially if they're not in your state, they don't see all the positive things that are happening. So I would love if we could wrap up with just something that you're really excited about that's happening in your state, that it's, if it's in the budget or just something that's going on that that folks might not know about. Dave, what's something really exciting happening in Tennessee?
Well, excuse me. I would say we don't have a pro baseball team, so we are spread between Cincinnati Red fans and Atlanta Braves fans. Excuse me. Next August, we are going to host a baseball game at a NASCAR speedway in Bristol. They'll host 146,000 people.
Wow.
And so we're real excited to do
Wow.
that. We have a small role in that to help promote that, but it's going to be a really neat event. So you're all welcome.
We'll put that on the calendar. What's something great that's happening in Ohio, Kim?
That's fun. And I will just concur with Dave on the Cincinnati Reds fandom, of course, strong here in Ohio. I'll also just give a plug for the national champion Ohio State Buckeyes. So that was a fun thing for Ohio here in the last month or so. But I'll kind of turn back to our budget. One of the exciting things about our budget, it's not new, but it is important. We continue to invest in our H2 Ohio water quality program. And this has been important in every single one of Governor DeWine's budgets. And we know that water resources are crucial for not just for health, but for ongoing growth and economic development. And Ohio is well positioned with abundant resources from Lake Erie to the Ohio River. And it's important for us to keep focusing on building wetlands and educating and encouraging farmers to follow best practices around nutrients and addressing outdated water infrastructure. Because again, we know that Ohio we're the heart of it all, and we want to maintain our strong growth, and we know that water resources are important for that.
What about California? What's something you're excited about, Erika?
Well, it's less about excitement, but I just want to say it's going to turn it back to the fires, and you'll see why. So even in light of tragic events, I would just want to point out that we're seeing rays of hope, resilience, and vitality. The response and recovery efforts have really just been overwhelming at all levels of government, and it has been an all of government response. And I want to highlight that both federal, state, and localities and people have been working around the clock to clean up communities, get kids back to school, get people housed, provide supports for them as they're needed. And I mean, it's also an opportunity, right? As we're rebuilding parts of Los Angeles, we can build stronger, we can build smarter, we can increase fire resistance and resiliency. And so, I mean, in the light of sort of these devastating fires, we are seeing, I'll say it, a ray of hope.
That is the perfect message for us, I think, to wrap up on, is just finding that silver lining in those rays of hope, even in tragic circumstances. So really, really appreciate that, those insights. Thank you for joining us today. I hope you enjoyed hearing from these state budget experts as much as I enjoyed talking with them. We appreciate our NASBO leadership and also all of you who spent some of your day with us. Please visit the NASBO website at nasbo.org to stay up to date with fiscal analysis, summaries of governor's budget proposals and state of the state addresses, and more. Thank you and enjoy the rest of your day.